Ooh boy, another one of these days, huh? Good afternoon, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hope everybody had a very good day of trading. That being said, guys, today was definitely one for the multi-year record books. Unfortunately, to the downside. Yes, QQQ pretty much having its worst intraday decline, almost 3%. That is the worst day on the QQQs since all the way back here in mid-December of 2022, pretty much since before this entire 1.5 rally even started. So very negative day on QQQ in the last 1.5 years, pretty much the lowest on record. Now that continues into semiconductors, especially semiconductors. The SMH index ETF as a whole was down 7.12% today. Massive decline, its worst day since a lot further than that. You would have to go back to the pandemic, March of 2020, to find a single day decline on the semiconductor index as a whole. A lot of names, guys, in semiconductors were down 7, 8, 9, 10% today. It was an absolute bloodbath in technology as a whole, but more specifically in semiconductors. And the reasons for those declines, guys, are pretty much twofold. Number one, of course, we have the continued rotation out of big tech and into value and small cap names that have been left behind in terms of underperformance in relation to big tech. A lot of value names have done pretty good this year. It's just they have not performed to the level that big tech has. So we have this massive rotation that started after last Thursday's CPI report, which hinted at potential rate cuts in June because inflation is getting to more manageable levels. So a lot of people are exiting the big tech trade, which is known as a safe haven trade because the amount of cash that they have on their balance sheets, and now they're getting out of big tech and rotating into value names that may have been left behind because of a little bit of a cyclical nature of their businesses that don't necessarily operate at the highest capacities when interest rates are high. Now, that's reason number one. Reason number two is because fresh off the press this morning, Bloomberg had a report that the Biden administration was cracking down, further cracking down, as a matter of fact, on exports of semiconductor technology towards China. And obviously, guys, most of these semiconductor companies, 20 to 50% of their entire sales mix goes to China. So obviously, when we have export restrictions potentially being put in place by the Biden administration, that is not going to help these companies out. And it's not specifically to the Biden administration or whatnot. I'm pretty sure Trump would do the same. As a matter of fact, he has commented on the matter, and he would pretty much have the same opinion that they need to restrict semiconductor technology towards China to remain competitive. So it's not necessarily a Republican versus Democrat thing. It's really a case of the United States as a whole wanting to protect its intellectual property. So for those two reasons, guys, we had one of the worst days in a multi-year time period across those two large indexes. So in today's video, guys, number one, we absolutely have to cover the report by Bloomberg saying that the Biden administration was going to crack down on semiconductors and explain a bit of what's happening. Number two, we're going to go through one company earnings that we had today, and it's going to be ASML, one of the industry leaders in semiconductor technology as a whole, and they had one of their worst days, actually their worst day since also the pandemic, March 2020. Very, very steep decline, guys. Other than the March 2020, this was their largest single day decline ever in the stock price's entire history. So definitely this year, guys, we've seen a lot of waterfall drops on companies after earnings. Think Nike, think Starbucks, think Salesforce, and now even ASML. So is this maybe hinting at what potentially could happen to semiconductor earnings over this quarterly earnings season? Well, very possibly. We will have to see what TSMC has to say about the matter tomorrow. So we'll get into ASML earnings in a short minute here. Thereafter, guys, we're going to do a major technical analysis rundown on our major market indexes right here, then dive into our big tech names, and lastly cover a few swing trade opportunities that we actually gave in yesterday's video. But I just want to reiterate because those are the ones that I'm going to be taking heavier positioning into. And lastly, we're going to conclude with my portfolio to see how much money did I lose in big tech and semiconductors today. So without further ado, guys, lots to cover today. Let's jump right into it. So SPY down 1.4%, QQQ down 2.94%. Absolute disaster on that one right there. And you can really see it on the heat map here, guys. All of big tech once again down, the bottom half of the market performing okay. And just to give you guys a quick glimpse, right? Half of the S&P 500 was up and half was down. Right? But you can't really see it here because of the amount of weight that big tech and semiconductors has in the market right now. So obviously a lot of your software companies and large cap tech was significantly down, guys. Even Meta going down 5.5%+ after Donald Trump making comments that he was potentially not willing to ban TikTok, which obviously raises competition for Meta. Now, the rest of big tech absolute disaster still. Apple and Microsoft not falling too much, but still down, Apple 2.5%, Microsoft 1.33. The real disaster, guys, was right here. Take a look at the amount of percentage declines on this list. Intel was actually one of the only ones that was positive on the day, but you can see the damage is right there, right? NVIDIA, 6.6%, Broadcom, AVGO, 8% to the downside. Be hard pressed to find another 8% down day on AVGO if it's not an earnings day. AMD, 10%. Obviously, that China news affects them directly, and so many more. The bottom half of the market, though, the rotation trade into value remains healthy. Financials, outperformance. Healthcare, outperformance. Consumer defensive, outperformance. Industrials, mixed, but still holding on better than a lot of big tech names. Real estate and utility and energy continue moving higher. That is going to be the case in point for the value-oriented rotation that should be occurring all throughout this earnings season. So we will watch this one day at a time, but definitely heavily leaning towards more positioning in here and kind of leaving these chill out maybe for the next couple of weeks, right? So moving on to the one-day performance here, you can see that half of the market was pretty much in the green, but the half of the market that was in the red was much more in the red. That is why you had that massive swing to the downside here. Basic materials, industrials down a little bit, consumer cyclical, communication services, which is Google and Meta, and technology, obviously your worst performer, almost down 4% on XLK in one single day. On the 1 week relative though, you can notice that the market is still relatively balanced in terms of the rotation trade. Most of your sector is still in the green. The only two trailing, once again, are technology and communication services, which is Google and Meta. So all of this has been down all week, and all of this has pretty much been up all week. The rotation continues, guys, so keep a very close eye on that one. May just be a case in point where we take a little bit of a breather on these and start trading a little bit more of all of the rest, right? So moving on, guys. Number one, what we have to cover here today is obviously what happened with the Biden administration, right? So they came out early this morning. There was a report by Bloomberg, and it was pretty much this following one. Major chip stocks slump after Biden reportedly considers more restrictions on sales to China. Now, shares of ASML, Europe's most valuable tech company and maker of the world's most advanced chip-making machines, slumped more than 6%. Well, now it's closer to 12 early Wednesday morning, following reports that President Joe Biden may be mulling even harsher trade restrictions to further limit China's ability to manufacture powerful semiconductors. He started this whole process in the month of January, and they have been relatively firm on that as well. And now he is getting even more firm. So, under the new rules, the U.S. can impose export controls on goods made by foreign companies. ASML is a Dutch company. They are not a U.S. company, but the U.S. can still technically tell them what to do. If any U.S. origin technology is in the production or operation of the item, that's how they get around that loophole. The measure could severely limit Dutch firm ASML's and other companies like Japan's Tokyo Electron from selling their products in China. Tokyo Electron today down about 8% and ASML down about 12%. Now, what to watch for? According to the report, the U.S. has urged Dutch and Japanese government officials to step up and place curbs on the export of advanced chip-making gear to China, which they already have, by the way, since January, warning that the U.S. may have to turn to the FDPR rules if they don't act. Bloomberg says that this is in response to U.S. semiconductor companies being frustrated at having to adhere to restrictions on business with China while foreign firms don't. Shares of Taiwanese chip-making giant TSMC, the world's largest maker of advanced chips, fell more than 2.3% on Wednesday. They are actually down a lot more, 7% by the end of the day. The slump came after Bloomberg Businessweek published an interview with Trump in which he was unwilling to commit to defending Taiwan from potential Chinese aggression. Trump said his unwillingness is partially fueled by frustration over Taiwan's semiconductor dominance. Taiwan took our chip business from us. I mean, how stupid are we? They took all of our chip business. They're immensely wealthy. Those are Donald Trump's comments on the matter. So as I was saying, guys, it's not necessarily a Democrat versus Republican thing. Trump and Biden are saying the exact same thing. They both want to crack down on, number one, exporting chips to China in terms of exporting their intellectual property to China. But number two, they want to shore up production of semiconductors back to the United States, which is why TSMC is actually building a massive manufacturing facility in the United States as of current times. Now, the key background here. Last year, the Dutch government unveiled fresh controls limiting ASML's ability to export advanced chip manufacturing tools to certain countries on national security grounds. The regulations we're talking about. Despite not explicitly mentioning it, The rules were an effort to curb China's access to the tools, and they became into being after pressure from the US government. In January, ASML disclosed that the Dutch officials had partially revoked the license for shipment of some of its chip-making systems to China. So if you guys don't know, guys, ASML manufactures massive machines. We're going to get into their earnings very shortly here. Massive machines, $380, $400 million machines that help in the manufacturing process of semiconductors. They are actually essential in the manufacturing process of semiconductors. All those little tiny lines and wires that you see in semiconductor chips, right? They're extremely tiny. So those are what you call circuits, and all of the circuits are made pretty much by this machine by engraving. They use light technology, extremely efficient light technology and laser technology. You can see it right here, UV light essentially, to pretty much engrave those semiconductors with the patterns and requirements. Of course, I'm not an engineer, but just kind of giving you guys the, easy explanation, right? So they do have these very advanced machines. They are not selling the most advanced machine, which is known as your EUV lithography machine. They are not selling that one to China. They are selling the one step down from there. So China doesn't have the best technology. The rest of the world has the best technology with the best machines. China gets one class under that. So that's why they have restricted some exports, but not all exports. 50% of ASML's business comes from China. Keep that in mind, which is why they were down so much. Now, speaking of ASML, let us dive right into their earnings right away. And you will see here, guys, massive drawdown on ASML. The expected move on ASML as of yesterday was about 6.5%, and they went pretty much double that at about 12.74% to the downside. As I was saying, guys, pretty much their worst single day of trading since all the way back here in March of 2020. So what exactly happened on the earnings? Well, their earnings, to be quite honest with you guys, their earnings were actually quite good. The headline, however, this article right here, written by Bloomberg about more restrictions, is the reason for more than half of ASML's decline and pretty much a large responsibility for a major decline in SMH as a whole. Let's get into their earnings, shall we? So they actually had very good earnings, guys. They beat on EPS by about 8.81%, and they crushed on revenue by about 5%. This is Q1 2024 for them. So this is one of their weaker quarters traditionally, but they did give us guidance on that as of last quarter. They said that this year would be a little bit of a transition year. So sales in the first half would be a little bit slower, which is the exact same guidance that every single other semiconductor company gave. They said that 2024, a little bit of a cyclical slowdown year, but then 2025 should be ramp, right? So we already had the guidance, right? So it's not a question of them underperforming. They actually beat their already lowered guidance that they had given. Very decent earnings report. Let's get into it right away. ASML bookings surge as AI chip demand boosts purchases of its critical semiconductor tools. So let's get into it. Though ASML beat expectations, shares of the firm sank 11% on Wednesday amid a global slump in semiconductor stocks, as the Bloomberg report that we just covered pretty much came out and destroyed them. So ASML sources 49% of its sales from China, highlighting how much of a risk such export curbs would pose to the firm. ASML previously forecast second quarter, the upcoming quarter, this is next quarter guidance, net sales of between 5.7 and 6.2 billion euros. So net sales fell 9.5% year on year, while net income dropped by 18.7%. They had already guided for this, guys. They guided about the sales slowdown, and they guided that also net margins would be lower because their research and development costs stay the same all throughout, even when they have declining sales. That's why you had a little bit of net income crush. Nothing in terms of a big red flag for the company. Now, net bookings, how much money do they have in the pipeline? How many orders do they have in the pipeline? A key metric for the market, marking orders for ASML machinery, totaled 5.6 billion euros in the June quarter, rising more than 24% year over year. This beat the estimate. The estimate was about 5.2 billion, so they almost beat it by 10%. Very, very nice new net bookings number. Now, ASML had previously called 2024 a transition year as it expects the semiconductor industry to start to recover after a tough 2023. The company kept its outlook for the full year unchanged, so reiterated guidance, nothing bad there again. ASML now set its forecast third quarter net sales of between 6.7 billion euros and 7.3 billion euros. Analysts had expected 7.6. So a little bit light here on the next Q3 quarter guidance, so pretty much 2 quarters from now, but Q4 should be pretty good. As a matter of fact, they didn't change their full year guidance at all. So while there are still uncertainties in the market, primarily driven by the macro environment, we expect industry recovery to continue in the second half of the year. This is said by the CEO. Here's what the CEO had to say continuously. We see 2024 as a transition year with continued investments in both capacity ramp and technology. We currently see strong developments in AI, driving most of the industry recovery and growth ahead of other market segments. Here's what he continued to say as well. The industry expects to be in a cyclical upturn in 2025. As a result, we need to prepare for a number of new fabs, talking about manufacturing facility, right, that are being built today across the globe by other semiconductor manufacturers, which will need their machines. They need ASML machines. Those fabs will be spread geographically and are strategic for all of our customers. They are all scheduled to take our systems. ASML previously said that export restrictions would impact 10 to 15% of its China sales this year, and so far they have. Let's get into a bit of the presentation here, guys, and you'll see exactly what I mean in terms of why their net income was down. So very decent quarter as a whole. Nothing really bad to say. Based on different market scenarios, here's the long-term guidance, just to show you guys that it's such a solid company. Long-term guidance, 2025 to 2030. Based on different market scenarios, as presented during our Investor Day, we modeled an opportunity to reach annual revenue in 2025 between approximately 30 billion and 40 billion. They're currently about 27 billion per year right now, so that would be a nice little increase in the next 2 years, with gross margin between approximately 54 and 56%, which is standard for the company right now, a little bit better than they're doing right now, as a matter of fact. And in 2030, so 5 years from now, an annual revenue between approximately 44 billion and 60 billion. That is almost double what they're doing per year right now, with a gross margin between 56 and 60%. So not only are they telling you they're going to double their revenue in the next 5 to 6 years, they're actually going to improve their gross margins while doing so. Best of both worlds. No red flags long-term for the company at all, guys. Now, in terms of capital returns to shareholders, you'll see that they're very nice to shareholders, nice dividends being paid all the time, and very nice buybacks. They bought back around 400 million euros of share over the course of the quarter, and you can see the buybacks just continue to increase every single year, looking quite good for that. Now, in terms of why did they have a net margin decline, as you saw here in the article, right? A little bit of a net margin decline here. I'm not too sure what it is. Yeah, net margin dropped by 18.7%. Well, that is pretty much right here, guys. So as you'll see, not that big of a deal in my humble opinion. It was a bit of a lighter quarter in terms of sales. You heard it from the CEO. He said it's a bit of a transition year. They already guided for this. But look at the R&D costs. You can't blame them for R&D costs, guys. They're manufacturing $400 million machines, right? They have to be at the top tier level, on top of their game, which is why they spend so much on R&D. So you can see they have not really increased R&D expenses that much, right? Usually pretty much in line with the last 5 quarters. So when you have declining sales and the same cost, you can see SG&A costs also not really expanding too much. So declining sales with the same costs, that is what pretty much crushes your net income numbers, right? Which is why it is significantly down on the day. You can see it better here expressed on this little graph right here. Let me pull it up. So you can see this is the Q1 2024 right there. Usually their net margins are around 28, 30% on any quarter. This one was more about 23%. But as they said, that is not going to last, guys. In the second half of the year, it should recover back to normal. Net bookings on a quarterly basis, guys, still relatively strong, really in line with Q1 of 2023. But you can see usually Q2 and onwards, it does get better for the company. Q3 last year for them was a bit of an outlier, but it should be a nice uptrend throughout the year, right? That is pretty much everything. They did bring in almost pretty much negative amounts of free cash flow this quarter. Once again, that's because a lot of their net margins were eroded by these costs, so they weren't able to bring any free cash flow to the bottom line. I went through their entire presentation and financial statements, guys. There's really no red flags that the company is showing at all. Just still a very solid company is ASML, guys. I don't change my stance on that despite the one-day event that happened today, right? Still growing revenue 12% per year, EPS 21.5% per year through 2027. Everything's looking outstanding for the company, guys. I can't find anything wrong with this company. Gorgeous EPS expansion, gorgeous revenue expansion as well. Nothing bad to say there. The balance sheet is also in relatively good health, guys. Nothing really bad to say about it. Look, no debt as to speak of. $5 billion worth of debt, but they have over $7.5 billion of cash and decent free cash flow on a yearly basis. Nothing wrong with the company at all, and very strong net margins as well. They're one of the industry leaders. They have a monopoly, guys. Nobody in the world makes these machines, right? Every other semiconductor manufacturer is beholden to this company's machines, right? And advancements in technology. technology, and the replacement value is insane. When they come out with a new machine, well, obviously TSMC, Micron, and so many other people, they just have to get the brand new machine, right? And at $400 million a pop, that gives them very, very good sales trajectory, right? So no red flags for the company at all. In terms of valuation here, well, as you can see, we have a bit of a two-step process, right? So 2024 transition year. EPS will not be growing this year, but 2025 and onwards, it's growing substantially. So I have two ratios right here, right? If we take in consideration the 2024 lowered EPS amount, then the PEG ratio right now is sitting at about 2.13, and that's at the new price at the end of the day of 932, a little bit high, right? But if we were to take 2025, 26, 27 growth rates, then they get a PEG ratio of 1.35, very decent, guys. If we were to blend these two right here, as a matter of fact, we can do pretty much a streamlined average right now, 1.35 plus 2.13. I think that's a fair way to do things, right? When you have such a big gap. PEG ratio of about 1.74, really not that bad for this company whatsoever. In terms of the technicals, guys, well, obviously the technicals, they lost a lot this week, right? So loss of the weekly uptrend, big flush, and with such heavy momentum to the downside, guys, very tough to say, yes, this is the bottom, right? We have to wait for the eventual bottoming out process and recapture of the daily uptrend. The larger area of support is obviously down here, guys, 856, right? 856 down to 800 is where we start building a lot more sturdy levels of support. Those are pretty much your previous monthly all-time high resistance points, should be newfound support lines for the business. So if ever we do continue our decline, guys, I will be patient on this one. I was very tempted to buy some shares today, but I'll tell you the reason that I didn't, right? The reason that I didn't is because TSMC is reporting tomorrow, and then we get into big tech, and we obviously know that the big tech, the rotation out of big tech since last Thursday has been substantial. So in my opinion, I'm going to be patient with all of these companies. If they just skyrocket from tomorrow and just resume all-time highs, then I will be wrong. But my gut feeling and my analysis tells me that we should be a little bit more patient on these. Yes, the dips are starting to get juicy right now, but if we're patient and wait for these things to truly bottom out in a nice little fashion, set some relevant support areas to base our trades off of, I think we will be more rewarded. So this one, even though I love the company, I like the valuation, it's decent, I am going to be patient with this one. But in terms of a long-term investment, guys, the next 5-10 years, such a strong company. So that's pretty much everything for your semiconductor disaster with the article and ASML earnings. Now let's jump right into our technical analysis portion of the video, shall we? So this one's going to be good here, guys, right? We are almost losing the lows on SPY right here. 556, guys, keep a close eye right here. 556.75, lose that, and unfortunately you lose the daily uptrend, and you open the door for the bears to set up for the daily downtrend consolidation phase. That would mean that we're maybe in for a little bit of a weekly consolidation phase. And although we do have decent amount of supports right here, just keep in mind on the S&P here, guys, right? Very nice higher lows. The higher lows are all the way down here, 519.46. So the S&P does have a lot of room to work with right now, right? The higher lows are very far. The bulls have tons of space, and we do have a nice area of support if ever the indexes continue kind of falling down during earnings, because we know, guys, these represent such a big weight. If they continuously decline while the rest of the market is good, then the S&P is just going to either hesitate, stay flat, or just slightly move to the downside just because of the weight of all of this, right? So could be expecting maybe some bi-weekly declines. Keep in mind, we have a lot of big tech earnings over the next 2 weeks. Netflix is going to give us a very good indication, guys, pretty much tomorrow, right? They're going to give us a very good indication of how the market is going to respond to big tech earnings. Netflix, if Netflix posts good earnings and goes down 7, 8, 9, 10%, I'm telling you guys, I am not playing any more tech earnings. Even with my more safer 2 standard deviation strategy, I'm just not going to do it because the continuation to the downside all throughout earnings cycle could be meaningful. I'd rather just stick to value names, the things that are being favored in the rotation right now, rather than really trying to pick bottom levels on tech when we may just be in for a more severe rotation to the downside, or maybe not more severe, but maybe more just prolonged, right? Rather than maybe the 1-2 week consolidation that we've been used to on a lot of big tech. They only really go down for maybe 1-2 weeks and then resume an uptrend. Well, maybe now we're in for a little bit longer consolidation. That's why I'm staying away. I'm going to watch Netflix earnings tomorrow. I'm not going to be playing Netflix earnings tomorrow at all. Maybe after. That's the only time I'll consider doing it, is after earnings come out. Maybe I'll make some plays with some short puts or put credit spreads. But before, I'm probably not going to do it anymore, guys. Just going to be more safe than sorry coming into this earnings cycle, especially with this rotation and especially with headlines like these, right? So moving into QQQs right now. QQQs obviously having a tragic day right now. Daily downtrend is set in motion for the QQQs right now. Loss of the 12 EMA, which is pretty much our guide in terms of an uptrend. So clear loss of the uptrend. Daily downtrend is underway by the bears right now. So that means that we are in for a little bit of weekly consolidation. And keep in mind, guys, weekly higher lows are relatively far away, right? Weekly higher lows on the QQQs are all the way down here at about 442. So we do still have a lot of space on the Qs, and we do have a nice area of support that we're coming into. 12 EMA is down here, 470, and then we come into this box, right? 466 down to our higher low, about 447. Could be a nice area for the bulls to maybe build a little bit of a base of support as we consolidate, get the rotation underway, and then later on in the year, that is when we may continue to rally. I'm not saying big tech is done for the year, but it may just be time for them to consolidate a little bit more than anticipated. Keep in mind, those short-term timeframes are absolutely destroyed right now. Hourly RSI on the QQQs was earlier today 14. So we'll see how it is coming into tomorrow's session. And the 4-hour RSI is also deeply oversold, but we could just be expecting something like this: lower high into lower low continuation. It all is predicated, guys, on 2 company earnings tomorrow, and that is going to be TSMC and Netflix, right? So the QQQs could recover tomorrow, but if in the event TSMC is decent, but Netflix gets crushed, big tech will likely follow suit, and we'll just get some continuation to the downside, right? So even though it looks very juicy for a buy the dip attempt, QQQ calls into the end of the week, I'm just not doing it, guys, because of those earnings catalysts. I was very tempted at the end of the day with such high oversold conditions, but I'm just not going to do it. Moving on to XLF financials right now. XLF just continues their grind higher, and this is part of the swing trade that I was talking to you guys about yesterday, right? These are going to be favored into an interest rate cut cycle. That being said, daily uptrend is clear as day right now. Be very careful though, the daily RSI is all the way at 78 right now, and I know XLF can get overbought sometimes, but 78 is still a relatively rich level for this ETF right here, right? Take a look at this right here. If I can actually label it on the chart, there you go. 78. When do we hit 78 in most recent history throughout this rally? Well, we hit it one time right here, and then we consolidated for 2-3 weeks. We hit it again one time right here, and then we consolidated and actually had a decline. So as you can see, guys, not necessarily every single time it's going to lead into a big decline like this, but could just maybe see a little bit of consolidation after such an extended move. And the bulls have tons of space for that consolidation here, guys. Anything above 41.3, just looking for a daily higher low for maybe further trend continuation. And even if we lose the daily uptrend, setting a daily downtrend, the weekly now has tons of space, guys. Gorgeous weekly uptrend. Well, new weekly upswing in motion, looking eventually for the weekly higher low for further trend continuation. So financials and healthcare will be favored over tech in the short-term future, in my humble opinion. Healthcare moving nicely to the upside after UNH pushing a new all-time high. I was talking about it yesterday, guys, and it finally happened. UNH really breaking above. This one, I do believe, even though it's run a lot, guys, I think it's just going to continue running more and more and more all throughout this year. I would not be surprised once again if we see this one maybe hit in the mid $600 range over the course of this year. So still some meat left on this trade even after this ridiculous rally, right? So UNH looking very, very solid, which was a major contributor in bringing this index up once again. So healthcare, guys, healthcare looking very, very good, guys. Beautiful daily upswing. Really did a great job of counterbalancing that daily downtrend into a massive engulfing move. And now the bulls have so much space. Whenever this move is topped out, going to be looking for a daily higher low, anything pretty much above 142.85, looking for that daily higher low for further trend continuation. I'd be targeting this area as a fallback location, right? Prior all-time high resistance should be newfound support, and that is 148 all the way down to about 147. I maybe will be tempted to play the ETF for some short puts if we do revisit this location right here for a little bit of an upswing. And one of the companies, guys, that I was talking about continuously last week, hopefully some of you guys are able to play this one, AbbVie, now finally starting to break out on the daily, breaking out in the weekly, and now looking for that monthly trend continuation as well. So that was one of the healthcare plays I was watching. Hopefully everyone else was, or most of you were able to participate as well. Now moving on to semiconductor as well. Semiconductor, guys, worst day in 4 years pretty much. So daily downtrend clear as day, which is what we were watching. A break of 271 would be daily downtrend and would be into weekly consolidation. We have now flushed a even bigger level here, guys. That was your weekly higher low. We have now officially lost the weekly uptrend, and we have not lost the weekly uptrend on SMH, guys, since last fall's sell-off. We have never pretty much lost it. Even back here, we were on the verge of losing it, right? But didn't quite lose it. So now we've officially lost the weekly uptrend. Weekly downtrend is not in motion. That would be lower high into lower low, but it has to be notable to us. So now where are the likely areas that we might pull back into? Well, I would be looking at this zone right here because I have a line there, but in all reality, it's more of a zone, right? So moving on to 240 down to about 225 is going to be the likely area when where this move could potentially bottom out. I'm not saying it's going to get there in one clean shot, but if we continue to have semiconductor weakness, and if we just put in daily downtrend consolidation, something like this slowly, not necessarily 7% days every day, right? May just come down into this level right here. And that could be a juicy level where the monthly bulls will be looking to maybe buy the dip for a potential continuation into the second half of the year, as most semiconductor companies have said over the last 2 company earnings so far. 2024 is going to be a transition year, getting better in the second half. So a pattern like this would definitely line up with that guidance. So keep a close eye on this location right here. That is where I am personally more interested in playing some semiconductor names. Now moving into the Russell. So the Russell putting a stop to its monster rally. As a matter of fact, though, it did set a new high this morning before being dragged down with the rest of the market, right? However, no hourly downtrend yet. Still no hourly downtrend. So the bulls still do have a chance, guys, at continuing this rally to the upside. However, if we lose this low right here, the low of the day, 222 into tomorrow, well, then your daily consolidation will be underway. And obviously the bulls have tons of space, guys. Anything pretty much above 200, going to be looking for a daily higher low for further trend continuation. The danger is if ever the bulls give back too much of this move, they open the door for either some sideways range-bound consolidation or, at worst case scenario, a daily downtrend, right? That would lead us into a bit of weekly consolidation. And I've been saying all week pretty much that if we continue getting rejected right around here where we are, 227, 230, like we got rejected on this morning, guys, we may just be due for a little bit of a pullback. And if I can catch the Russell, guys, retesting, think 213 down to 211, that may be where I'll be willing to start a position for the eventual weekly uptrend shift to the bulls and just simply monthly trend continuation at that point. So the Russell not looking too bad today, but may just be time for a little bit of consolidation. High time frame, the daily is overbought significantly. The 4-hour cooling down a little bit, but is still overbought. But once again, I'm telling you guys, keep an eye on the hourly time frame. The bulls still control it, so we could continue seeing gains throughout the rest of the week if the value and risk on trade continues getting some rotation out of big tech. But if it does choose to consolidate, hopefully these lower levels provide us an opportunity for entry. And now lastly, the Dow Jones, guys. Dow Jones performing beautifully again today. And this is going to be a case in point here, guys, right? The rotation that we're looking for, guys, just look at all the companies in the Dow Jones, and most of them, except for the big tech names, will be the ones that will be most favored, in my humble opinion, over the next couple of months as we get this continued rotation, right? So if you're looking for a list of stocks to trade or just something to maybe sit in, the Dow Jones may not be a bad bet at all, right? So daily uptrend is extremely healthy right now, looking very, very solid. If in the event we get a little bit of a pullback on the Dow Jones, just looking for a higher low, anything above 39,150, looking for that daily higher low for the continuation of the uptrend. Keep an close eye on your hourly time frame. Very overbought right now on the 1 hour, very overbought on the 4 hour as well. And this is not semiconductors, guys. It's the Dow Jones. Usually it doesn't hit these levels, and when it does, it doesn't stay there for too long before we see a little bit of consolidation. So we will attack that consolidation when it comes, but just know if we pull back too much, let's say we get broader market consolidation over some recession fears or something like that, just know the bulls have tons of space. Even if we set a daily downtrend, guys, just going to be looking for a weekly higher low into prior all-time highs, breakout, retest, and run throughout the rest of the year, looking very good. Now let's get into some big tech names because they came down a lot. Now let's move into Apple, right? Apple down about 2.53%, definitely not a good day for them. So Apple also in jeopardy of losing the daily uptrend. Now, they played good defense today at the 12 EMA, but we can't forget the daily higher low is right here, 226.17. If ever we were to lose that, Apple loses the daily uptrend and opens up the door for the bears to set up for the lower high into lower low daily downtrend scenario. If that happens, just know that Apple has tons of space on the weekly. Anything above 207, just gonna be looking for a little bit of a higher low for maybe some weekly trend continuation. We will see, guys. We will definitely see. Apple has earnings, of course, at the end of the month in about 2 weeks' time. So we would like to see them try and protect this level prior to earnings, because obviously if we come all the way down there and earnings are bad, well, then we just may get a retest of your prior highs breakout, right? Still a long long way to go for Apple. I'm not saying it's going to happen, just preparing us in the event that it does, guys. And if Apple pulls down into this location right here over the next week, the only location I'll be looking to sell short puts on Apple will be pretty much 210 down to 207, right? Very, very, very risk averse trade. I'm not going to be looking to get too aggressive on tech because we are still at relative all-time highs on a lot of them. As of now, though, Apple's looking good. Just keep a very close watch on this level right here, because if they lose that, then they lose this nice daily uptrend potential and maybe setting up for a little bit further consolidation. Moving on to AMD right now. Give me a very quick second. AMD, man. They had to do us like that, guys. They just had to do it to us, right? We had the most gorgeous breakout retest and maybe run pattern in the history of AMD's, most recent breakout cycle. And they had to do us dirty, unfortunately. But, stuff like that happens, guys, right? It's the market. It can throw you through the washing machine when you least expect it, right? So, unfortunately, AMD, guys, giving up a lot of these gains. At this point, it's going to be, dare I say, impossible for the bulls to completely V-shape this, guys. It's going to be absolutely impossible. The best we can possibly expect, right? Because we are technically still in a daily uptrend right now. However, the bears have taken back way too much of this move, guys. 85%, right? So the best we can possibly hope to get is maybe somewhat of a tightening range, right? If we can get a tightening range, maybe into earnings and get positive earnings surprise, then we may be able to attack the 185 region once again. However, until that time, that is really the best that we might be able to get, because when we get this move higher, guys, it is going to be looking for a lower high, and then it's up to the bulls to protect the lows, of course, right? So when we do bounce, going to be looking for a bounce, but keep in mind now this level right here is going to be resistance once again. That's 173 down to about 170. So very unfortunate for AMD. Even on the weekly, guys, giving back so much weekly gains right now on AMD. Got to be very careful. The higher lows are here. 154, lose that and you lose the entire weekly uptrend as well. And then once again, we will have to rely on the bulls to protect the lower areas of support, which pretty much start 145 down to 130. I can't believe I'm saying those numbers once again, but it just goes to show how much damage was really done in the last 3 days of trading. So AMD, guys, I will once again stay patient on this one. I have no positions on AMD as of now, but if we continue this decline, maybe come into daily oversold conditions. I know the lower time frames are crushed right now. 4 hours starting to get a little bit oversold. 1 hour is absolutely crushed right now, but it can continue lower. Unfortunately, guys, these are very, very volatile, right? So in the event that AMD really comes down once again into the 200, into the lower 150s, I may have to once again resort back to playing the lower strikes right here, 140 to 130. But as I said, guys, I'm going to have to see some very juicy opportunities for it, because I want to pivot more to value names right now and just let all these things cool out, right? Let everything smooth out. Let AMD form nice, smooth bases of support. This momentum is extremely strong right now. I need to see them take a little bit of a breather and set up some support levels. Give me something to work with right here, because we're coming down into this one really, really hot. So we'll keep this one on the back burner and watch what it does over the next few days, but definitely not looking the best. Moving on to Amazon right now. Amazon, same thing, right? You would have thought that Amazon would have respected maybe a first touch of the 190. It just did not care today, guys. Technicals did not matter. Too many headlines working against big tech today, and especially that rotation as well. So Amazon, daily downtrend in motion right now for the bears. So they are in full control of the daily time frame right now. Broke right through our 190 area of resistance, which was now supposed to be support, but unfortunately they broke through it right now. So even now, guys, we are in weekly consolidation for a company like Amazon. Take a look here. It's just going to be looking for the weekly higher low, anything pretty much above 174, looking for that weekly higher low for a bit of continuation. Keep a very close eye. We are toying with the 12 EMA right now on the weekly, something that Amazon really hasn't lost that often, except for their earnings mishap right here, and very, very briefly in the end of the month of May, right? So pay very close attention to this one right here. Same principles apply here, guys. If big tech rotation gets really nasty, even though Amazon has tremendous fundamentals, if we just continue this daily downtrend decline, well, obviously we know the larger support zone right now pretty much starts at around the 180 level, but it really gets more solid here, 177 down to about 166. Let's put it two ways, right? I would like to say, I wouldn't like Amazon to come down here because my long-term portfolio is doing really well right now with Amazon up here. But if it does come back down here, give us some opportunities to maybe trade it. I will be looking for some short puts and maybe even for some longer-term call options. If ever we retest the mid 170s to low 170s, high 160s, I will be there buying Amazon. But for now, same thing, guys. just going to let it cool down a little bit, let it really work itself out of there, give the bulls a chance to set up for some weekly trend continuation. But keep in mind, Amazon, guys, has earnings pretty much next Thursday, right? So not too many trading days left for them. Moving on to Google right now. Google pretty much same thing, right? So Google daily downtrend, unfortunately, in motion right now. As soon as you see daily downtrend, guys, you know to look to the higher time frames on the weekly. This is weekly consolidation. We've been warning about this across all of big tech. So anything pretty much above 171.36, looking for the weekly higher low for further trend continuation. The first stop location for the bulls, perhaps 180, this previous resistance line, which is now support, and the weekly 12 EMA that Google has done a wonderful job defending pretty much all throughout this rally that started, March of last year. Looking not too bad on Google right now, not having some of the larger multi-percentage declines of the rest of big tech today, but still not a very good day for Google. Still this area right here, guys, 177 down to about 175 is decent support, right? But really the bigger one really comes in at around the 173 down to 170 level. So we'll keep a close eye on Google. Google, I am also giving a little bit of breathing room. They have earnings next Tuesday, so very limited price action until their earnings. And earnings, as I said, guys, for big tech, because apparently now they're heavily out of favor, I would not be surprised if once again, if big tech has good earnings, but their prices just get crushed because of this rotation out of big tech, right? Wall Street can so easily say priced in unless these big tech companies significantly, and I'm talking significantly, blow their current quarterly revenues and EPS out of the water, but also increase guidance to a degree that it's just, a clear beat across everything. If they miss ever so slightly, I don't think the markets are going to be very favorable for them, especially when you're working with, in terms of year-to-date gains, right? It's theirs to lose right now, right? Microsoft 18%, Apple 19%, Google 29.5%, Meta 30%, Amazon 23%, NVIDIA 138%, right? So a lot of these companies are outperforming the S&P. It is up to them to defend those gains by posting increases in guidance and ridiculously good quarters. Moving on to Meta right now. So Meta also down 5.68%. They were pretty much as part of the big tech consolidation trade, but also Donald Trump's comments about not wanting to ban TikTok heavily played into that hand as well, which really led to a catastrophic day for Meta. You would have to go back a long time in Meta's history, guys. 5.5%. If you don't count any earnings dates for Meta, guys, just a one single day of trading pretty much, you would have to go back arguably, I think, to when they really started falling off a cliff in 2022, right? So same thing, guys. It's been pretty much 2 years that Meta has not had a single day decline of 5.68% when it wasn't a question of an earnings day. Very, very nasty day for them. Luckily, we are in a nice region of support right now, 482 down to about 459. I would have expected the bulls to slow down the bears as they came into this area. Absolutely nothing to be done here today, guys. Just waterfall drop, algorithms pretty much smashing the bid all day, right? No relief whatsoever. Hourly time frame is absolutely crushed. 4-hour time frame as well. Not quite, as bad as the 1 hour, but still 15 on the RSI on the 4 hour. So could be looking for a short-term bounce, but even a short-term bounce here, guys, may just be a case in point for a little bit of relief and then maybe further decline. I would not be surprised if that is going to be the case in point. So I did buy a little bit of Meta shares here right pretty much at the close at the current share price right now, expecting a little bit of a bounce, but I am ready to dollar cost average, guys. I am trying to build a position in Meta. Meta is one that's come down from the previous all-time highs, already 15%. I will DCA, guys, even into their earnings. I will DCA all the way down into the lower 400s if I have to. I like the valuations of Meta right here, so I'm nibbling. Slowly, give it some time, be patient, and just wait for the markets to come to us, right? So daily downtrend on Meta is clear as day right now. Any move higher, going to be looking for a higher low. Anything pretty much above, below 504, going to be looking for that higher low lower high, guys, for pretty much continued downtrend for the bears. In terms of the weekly, loss of the weekly uptrend as well. Now, weekly flush, not a weekly downtrend. That would be lower high into lower low. Just some very aggressive weekly consolidation right now. And as I said, we're coming to the lower part of our support zone, 456. And below that is the prior earnings session, right? 430 down to about 420. So if we do lose this level here, guys, we may be coming quickly into this location. And Meta, I'll remind you, has earnings in 2 Wednesdays from now. So still 7, 8, 9 days of trading left before their earnings, but not that many still, right? So it'll be a toss-up for Meta pretty much. I like this dip buying opportunity, but Don't forget, we are not daily oversold. The short-term timeframes are oversold, but I really like making larger plays when we get daily oversold conditions. Then I can go in with a bit more size. Moving on to Microsoft right now. Microsoft, same thing as the rest of big tech guys. Daily downtrend underway for Microsoft. So if we do bounce from here, going to be looking for a lower high, anything below 456, these highs right here, lower high into maybe lower low continuation. On the weekly as well, guys, just some weekly consolidation, right? Weekly gorgeous uptrend right now, looking for the weekly higher low. And I've been targeting, as I said, guys, the 12 EMA down to pretty much this horizontal line of resistance, which is now support 440 down to 430 is the pocket that I'd like to see Microsoft respect for then a little bit of a bounce. So looking decent on Microsoft, have a nice big level that we're coming up into right now. We'll take it one day at a time, not daily oversold. And Microsoft didn't drop too much. 4 hour, yes, we got a little bit oversold. 1 hour was oversold intraday as well. But you can see, guys, the daily is not even close to oversold right now. So maybe just a little bit of continuation. I would like to get closer and closer to 430, guys, before maybe starting a little bit of a nibble on Microsoft as well. All in all, though, the bulls are still in control of the longer term timeframes. It's just out of favor right now as a whole. Moving on to Netflix. So obviously, guys, Netflix tomorrow with their earnings, going to be impossible to derive any sort of short-term price action. The one thing that I can say is the expected move on Netflix right now is about 7% up or down. So 7% to the upside would really bring us into the all-time high location and pretty much put the bulls back in full control of this chart, because now we are in a little bit of a daily downtrend with lower support below us, 635 down to 604. However, if we do a one standard deviation move to the downside, guys, 7% to the downside, well, look where that brings us, all the way down back to 600, which would pretty much flush this entire zone of support. So if ever that is the case and we get a massive gap down open here, guys, I will probably be looking to buy the dip, but small, very, very small, because we're not daily oversold. You can see when we do get daily oversold, that's usually a decent opportunity to be buying the dips, excuse me. On Netflix, you can see it back here last fall, daily oversold conditions, last here in March, daily oversold conditions, and once again, after their earnings last time in April, daily oversold conditions, usually a good opportunity to buy Netflix. So I'm going to be waiting for earnings to make any form of play on Netflix as a whole, just because, as I've said here, guys, right, you can have very good earnings like ASML today had decent earnings. Nothing was bad. They missed on next quarter's revenue guidance by like 5%. That's it, but they reiterated guidance for the whole year. So nothing changes for the whole year, right? But it still wasn't enough with the comments from the Biden administration down 12%. So Netflix, part of the larger tech trade, obviously it's ran tremendously this year so far. Year-to-date performance is pretty much 34%. So it's entirely up to them to defend that. And they will need picture perfect earnings and picture perfect guidance to do it. So be very mindful of that. If we do have a heavy gap down, guys, the area that I'll be looking for, most likely 600 down to about 570, back to our prior earnings flush right there, is going to be the more juicy level of support, right? So 570 down to about 550. I start getting interested at this break of 600 into daily oversold. So I might make a little bit of a nibble here at 600, just a couple shares here, guys, but a larger majority of the position if we do ever fall down, because there's always an opportunity where we just flush and then maybe regain from here, right? So I want to get a little bit in here if we come down here, but definitely 570 down to 50 is where I go with it at a bit more size. Moving on to NVIDIA right now. So NVIDIA, same thing as SMH, right? We were on the watch for the daily downtrend flush, and we got the daily downtrend flush already. Now we are in a big area of support, which is pretty much 119 down to 115, right? Huge thing for NVIDIA tomorrow, guys, is going to be the guidance and the earnings from TSMC, of course. So NVIDIA can really go either way tomorrow. If TSMC is ever bad, I would not be surprised if this one drops another 3, 4, 5% before the week is over, maybe bringing us into the lower area right here. 108 is pretty much the next level of support. And then there's really not much, guys, until 96. I know it's a long way away, but we just have to be, we just have to anticipate if ever these things were to happen, if NVIDIA were to have a decline of 30%, right? Just putting that out in the open, because I will be buying the dip if we come down here. But short term right now, guys, need to defend this crucial area of support right now. Daily downtrend. So if we do bounce from here, guys, just going to be expecting a lower high, anything below 131, expecting maybe a lower high into lower low continuation, guys. And just weekly consolidation right now. We have actually lost the weekly uptrend on NVIDIA. If we close like this, guys, weekly downtrend on NVIDIA, that will be the first time since last fall when we barely set the weekly downtrend. So we'll see if this one is more noteworthy. 12 EMA is right down here as well on the weekly, 114. So we'll take this one day at a time, guys. but more weekly consolidation. Weekly downtrend means monthly consolidation is underway. So it may just be a case in point, guys, where NVIDIA might just consolidate until its earnings mid-August. I would not be surprised if July is a red month for NVIDIA, then maybe the beginning of August pull down into here, maybe 110, 100, and then maybe we get some further upside, right? So remains to be seen. We'll take this one day at a time, but larger form consolidation, I would not be surprised. Be very careful with your positioning on NVIDIA up here. Moving on to Tesla right now. So Tesla down about 3.14%. Definitely not a very good day for Tesla at all, right? So Tesla daily downtrend is maybe likely at this point if they follow the rest of big tech. Keep a very close eye at this level right here. 233 here, guys, right? Nice, gorgeous daily uptrend, but oops, lower high. Now we need to watch out for the lower low. The bulls still have a chance of protecting this with a tightening range, which is why I say we need to protect this low right here, 232.88. Big area of support below us as well. 238 down to about 227 is that area of support. But keep in mind, guys, Tesla with earnings next Tuesday. So not too many days of trading before then, only 4 days. So we will see, can they protect this consolidation range before earnings on Tuesday? Definitely do not want to see them do something like this into earnings, right? Because then if earnings are lackluster, then we may just come back down towards the lower $200 mark. So being very careful on this one as well, guys. Be very, very careful on Tesla, especially coming into their earnings next Tuesday. I will not be playing this one anymore until their earnings just because of the sentiment around big tech right now. So that being said, guys, just keep a close watch on this level. And obviously to the flip side, guys, if we, for whatever reason, continue this daily uptrend to the upside, break of 268, well, then the next profit target is pretty much 280 and then 300 for Tesla. So we'll keep a close watch on this one coming into earnings. And now lastly, Palantir, guys. So Palantir, not too bad today, down about 1.57%. Palantir really doing a great job of defending the higher levels right now, building a very nice little shelf of support right here at about 27.32, right? So watch these lows right here, $27, guys. $27 is your daily higher lows for continuation of the daily uptrend. If we were to lose these levels, guys, unfortunately, you lose the daily uptrend, open the door for daily downtrend, and maybe just a little bit of healthy weekly consolidation on Palantir, guys. Struggling a little bit right now, right? $9 down to about $28. This level right here, prior resistance 2020, 2021, acting as big resistance for the bulls. So if ever we're not able to mount and close above this level right now, well, at least we have tons of space on the weekly to do it, guys. Could be maybe a case in point pulling back into the 26, 25 level, prior resistance, current support for the stock, maybe a little retest of this range, and with some more momentum, try and attack this $28 one more time. So we'll keep a close watch on Palantir. That's the trade that I'm looking for myself. If we come down into this lower level, that's where I'm more interested in playing Palantir personally. That's pretty much everything I had for you guys today in our daily market recap. Now let's take a quick look at my portfolio to see how much money I lost. All right, guys, so getting into the portfolio right now. As you know, guys, I'm very transparent with you guys with the wins and the losses. Today was definitely not a very easy day at all. We realized pretty much $2,300 in losses, but it could have been a lot worse. Obviously, I feel very bad because this is one of the weeks where I tried and started doing the put credit strategy that I've been talking about for a while on the channel, and it's a very safe strategy, and I only do it on a handful of companies, usually only a few big tech names and companies like Visa and MasterCard. And usually I'm going 2 times the expected move. Most of these big tech names only really move 3-4% per week. So whenever I go with put credit spreads, I'm always going 6-7% below that, and I'm taking it when they already have a red day. So this is exactly what I did on Monday and Tuesday. We opened some put credit spreads on Amazon, on Meta, and also on Microsoft as well. And we gave ourselves a very wide margin of error, guys. In terms of the percentage of profitability, they were actually 95 to 97% probability of profit trades. So very solid trades, guys. If it were different market conditions right now, I would take these same trades 1,000 times more in the future. But unfortunately, you guys know I've not had the best luck this year in terms of positioning, right? It seems as though whenever I try to do something new, I get hit with a new record day of X declines since 2001 type of thing, right? So today, unfortunately, was one of the worst days of big tech in the last 1.5 years of trading. Now, obviously not an excuse, but it's just funny, right? Same thing with Starbucks this year. I tried to stay very conservative on short puts, still went lower. Worst day since 2005. Nike, same thing, worst day since 1985. Salesforce, same thing, worst day pretty much since 2004, right? So apparently it's a year of records for us on the channel here, guys. But suffice to say that even with those losses, we're still now not outperforming the S&P, but we're on par with the S&P. So even despite getting hit with record multi-year losses, guys, Got to take it on the chin, know that we're doing a very good trading strategy and focus on moving forward. We cannot dwell too much on the losses, even if they can be bigger than expected sometimes. We just have to focus on the fact, ask ourselves, did the trades we make, did they respect our strategy? If yes, and if we just got blown away by a very volatile week, that is not our fault, right? We're staying within the refined criteria of our strategy, and that is what keeps us alive in the long term. So that being said, guys, I had to close them all this morning pretty much very, very early on in the morning. As soon as the morning started, when I saw what happened with the Biden administration, the semiconductors industry, and ASML earnings, I said, I'm not taking the chance, guys. So the first one that we closed at a fairly big loss, I'll show you the losses after because I'm very transparent. We had the 435 versus the 432.50s on Microsoft. We wrote them on the Monday morning session at the lows, and we gave ourselves a very wide margin of error. Even after yesterday's trade, we would have still had, another 3% on Microsoft, even though Microsoft has already came down 1.5% intra-week already, right? So we gave ourselves almost 5% margin of error. Usually Microsoft, unless it's an earnings week, they usually don't drop 5% in a week. I had to close them this morning, guys. I know it's Microsoft. I know that I could potentially have a chance of keeping the position alive above 435, but keep in mind, I had 10 contracts, guys. That's $2,500 total risk if we close below there. And keep in mind, we do have earnings tomorrow from TSM and Netflix. I am not sticking around to see whether or not I can maintain this small little margin of error that I have right now, so I figured that I should close that. And closing that position, guys, I will show you the damage right now because it was not very pretty. So you'll see right here, the damage on those, we didn't lose $2,500 because I stopped it a lot before, right? We lost the difference between $975 and $575, so about $400 in losses pretty much, right? Plus the credit that we received about $80 in credit on that one, so we lost about 320 bucks. Still a decently sized loss, but the losses did not stop there, guys. We also had the ones on Meta as well, right? So Meta, we had a very conservative 455 versus 450s, right? So these as well, 5 contracts, and they pretty much $500 risk each, $2,500 total max loss on those. 450s versus the 455s. And we wrote these yesterday on Meta after Meta had a 1.5% day decline. Pretty much they were sitting at 490. I figured, you know what? Let me write some put credit spreads down here. 455 to 450. That, as of where I wrote it yesterday at the 490 level, would have been an additional decline of 7 all the way down to pretty much 8%. Usually Meta doesn't have those weeks, as I showed you guys, right? Unless it's an earnings week, this is the worst week Meta has ever had pretty much since the decline in 2022. So obviously was not expecting that one. So as early as this morning, guys, and good thing I did it pretty much very early this morning at 10 o'clock because it would have got a lot worse. Still a very heavy loss here, guys. So take a look at the loss on Meta right here when we close it early this morning, right? So 621 minus 367, that's pretty much, what is that? Like 250 bucks, something like that. 621 minus your 367, about $250 loss on that one, but it could have been a lot worse, guys. The max loss on these, if I let Meta run and said, you know what, I'm pretty confident they can hold 455 by the end of the week, and we get crushed tomorrow by TSMC and Netflix into Friday as well, well then 454, 455, guys, is not that far away right now, is it, right? It's only pretty much, let's call it 2.5%. Meta can definitely do that. They did 5.5% today. I am not taking the risk, so I chose to cap the loss pretty much at, just a cool $260, something like that, but it could have been so much worse, guys. So position management, very important. We also had another one of these, guys, and we had it on Amazon. So Amazon as well. I was a very, very, very conservative trade on Amazon. 182.50s versus the 180s, right? We had 10 contracts of these. Once again, $250 per contract times 10, $2,500 total risk. And you can see the loss right here. We closed it early, right? So the total loss on Amazon today was pretty much 407 minus 182. That's about $225 on that one as well. So luckily we closed those, guys, because Amazon, even though they traded roughly the same as when I closed them this morning, guys, it was getting a little bit dicey. So I closed these right around here, 188.5-ish, right? Right around that 10 o'clock mark. And then we proceeded to drop even lower and lower, right? We did recover intraday, but we didn't know that. So let's just say we wrote Amazon pretty much on Monday morning as well. We gave ourselves a very wide margin of error. Take a look, 190 down to about 182.50. That was a 5% extra decline. We wrote these when Amazon was down 1+%. So an extra 5% would have been a 6% down week on Amazon without any company earnings. Usually Amazon does not have those weekly declines here, guys. You know, you'd have to go back to pretty much last September in the little bear market sell-off due to inflation to find a 6% week. That's why I say the strategy is usually very, very safe unless it's coming into an earnings cycle, right? So unfortunately, guys, we got hit really, really hard on Amazon as well. Took about another $200 something loss on that one. But once again, I'm not sticking around to see if Amazon can hold this level below us, which at this point is only about 3% away. Netflix earnings, TSMC earnings, continued tech sell-off rotation. I'm not sticking around to find out. So those positions were okay, right? We managed them properly. It could have been a loss worse. Total max loss was maybe $7,500 if I would have just said, you know, F it, let's wait till the end of the week and see what happens. Not going to take that size of a risk here, guys, especially in these rotation conditions, right? So that was pretty much everything for that one. Now, where we did take a big loss here, guys, was on ASML. We had the ASML earnings, 2 times expected move standard deviation, put credit spread on this one as well. We had one pretty much put credit spread. So the maximum loss, we collected about $50, $60. No, less than that, guys. We collected about maybe $40 on these, if I do recall correctly. And the max loss was roughly $1,000. Now, we took a big loss here, guys. And luckily for me, I closed it early as well, guys. I closed it very shortly after the market opened. Luckily enough for us, it really stayed close here, guys, for the first couple half hour or so of trading rate, 965-ish level. So we lost a lot of money, but it could have been a lot worse, guys, because it literally came down, all the way in the close here below my 940 strike. So the total max loss could have been 1,000, but as you can see right here, we lost a little bit less than that. So 955 minus 646, we lost about $300 on that one as well, right? So big losses across the board, just on those put credit spreads, all of those combined, over $1,000 lost there as well, right? That's very unfortunate. Now, we did have a long position on ASML as well, and that was pretty much debit debit spreads, excuse me. So we got these call debit spreads for about $2 each yesterday, so $400. Luckily enough, we can only lose $400, but I was really counting on ASML beating their earnings and moving a little bit higher. Well, we got double whammy, not only to the downside, but also these calls ending completely worthless. We closed these for about 15 cents each. So we paid $400, we got back $30, another $370 loss. Actually, more than that, you can see it right here, right? About $423 loss on these positions right here. So all in all, across all of these plays that I made this week, guys, 1,005 plus I closed some losses on CLH. You remember, I tried to play CLH coming into last week, expecting maybe the 50 location to provide some decent relief for the company. And unfortunately, this week really fell off a cliff. We were doing well. We bought the lows here. We were up in profit. And now, unfortunately, we have lost this potential daily uptrend recapture by the bulls. So when we lost it in a significant fashion, because we were holding last few days, right? I was watching for these lows. Now we lost it, guys. Invalidates the trade. The next area of support is down here in the lower $40 range. Invalidates the trade. I am out, unfortunately. Even if they are leap calls, I'll look to re-enter, but I'm not going to try and continuously catch a falling knife. I did a good job trying to wait for daily uptrend recapture probabilities by the bulls. That's why I entered right here, going for the daily uptrend. We were doing good, but now trade unraveled on us. So we are out, cut the stop loss pretty much. So we lost $556 on the $40 in the money leap calls. And then the ones that I had for September also down $123. So that is another, guys, almost $700 lost there. Couple that with also the fact that I lost on the end phase short-term calls, which is why I really don't like doing short-term weekly options unless I'm there day trading them on the chart, right? So I make a little plays like this, risking only maybe $100 here and there on some calls, long puts intra-week, but I never go too much, guys, because you can obviously see how quickly the market can reverse into us. So those are pretty much the losses of the days. We did make some decent, tiny little gains to offset those, right? So our McDonald's trades are doing fairly well. I don't know if it's here, anywhere close to here. So the McDonald's call we bought yesterday is up pretty nice. That's up about 30%, but it obviously doesn't make up for all the money that we lost elsewhere, right? So we are performing decently in some aspects here, but unfortunately we just got really hit hard today by all that big tech and semiconductor sell-off. So as a whole, guys, that is pretty much the recap for the portfolio. Just going to show you the new positions. We do have some Abbott Labs, 97 puts into tomorrow, another earnings play. AMD 155s. You know, I went on those when AMD was roughly down already 7%, and now they came down 10%. So we'll see if we get assigned the 155s. Still an okay level here, guys. We really need to see AMD right now about 160. So we'll see if I get a sign or not, but not too optimistic on those as well. What else did I get out? We wrote the dominoes. So we have some dominoes right here. These are pretty much just put credit spreads, right? Very, very simple put credit spreads. We got about 35 and 40 cents for them, but it's Domino's Pizza. I went with a very wide margin of error, 2 times the expected move. Company is relatively solid, right? So we're all the way down here, roughly in the 440 down to 420 zone. So I'm not too nervous about this location right here. We'll see what happens on their earnings tomorrow, or if we just lose more money. We have the Equifax 220 short puts. We got 260 cents for those. Equifax, very defensive company as well. Can be volatile around earnings, but I like this one. We went all the way down here, guys, right? So Equifax went with the 220s, not taking any more chances. This earnings cycle went all the way down here, right? 2 times the expected move, even more than 2 times the expected move. I was surprised I got 60 cents in credit, right? And after earnings, we're good. So we should be good for tomorrow. So that'll be a nice little win in our bag. And then pretty much the only other thing I bought was I bought tiny 5 shares of Meta, relatively close to the close at 463 to ride them to the upside. And that's pretty much everything here, guys, right? And we did right. Yes, I did. Yes, I did. Yes, I did. Maybe bad, but we'll see what happens, guys. TSMC, we went with some short put credits, or some put credit spreads rather, the 150s versus the 145s. We will see what happens, but that is 2 times the expected move. So the expected move on TSMC is about 7%. And now that we had already an 8% decline today, we went with pretty much we went with the 150s versus the 145s. So the 150s versus the 145s, 13 down to about 15% in drawdown, right? That will be a very big decline for them. So I think I should be safe, but anybody's guess right now, especially after a big one-day decline like this. So I figured I should play it. The maximum I could possibly lose on this one, guys, is not that bad, $500. And you saw what I did with the rest. If ever it's looking very, very close, I might just close it before. Maybe I take, $100, $150 loss, but it won't be crazy on this one at least, right? But I do want to play it just to give ourselves the benefit of the doubt. Maybe this is just a one-day thing, right? I still like the levels that I play this one after, but if it does have a very big decline after that, guys, maybe looking to make some plays even deeper on it for next week. So I'm not opposed to playing them, but if I get a significant discount in playing them right away and be able to play them even lower. So hopefully that was educational for you guys. Big loss on the portfolio today, but hopefully you appreciate that I'm very transparent. The wins, the losses, right? This, unfortunately, guys, the week just really fell apart, right? All the trading strategies are good. I was not overly aggressive on any single one of those trades, but you can see sometimes when we have multi-record year-setting days like today, well, we just get put through the washing machine. It's okay, brush it off our shoulders. Tomorrow is a brand new day. We attack it, we move on, we adjust the strategy, adjust our stock picks that we're looking at, and maybe start playing a little bit more defensive names and not playing so much big tech or semiconductors unless they give us a big drop first, right? So I'm not going to be playing them on a weekly level unless I see very, very big drops first. I'm going to be patient and really orienting the rest of my trades into value names right now, which are going to be the hot trade probably for the next month. So hopefully you guys appreciated today's video. If you did, consider dropping a like for the growth of the channel, and also consider subscribing to the channel if you're new, if you want to keep seeing me lose money. Actually, we usually do pretty good, guys. Just a really outlier day today. So if you want to see me lose more money potentially, feel free to click that subscribe channel. We do these videos every Monday through Friday after the close. And lastly, guys, if you have any questions at all, please feel free to leave them down below in the comments and I'll be happy to answer. So take care, guys. See you tomorrow after the close. Big day tomorrow. And as I said, tomorrow, guys, even though I really want to play them, I am not going to play Netflix. I would rather play them after the fact if we ever get a little bit of a decline. So hopefully that helps, guys. Take care and peace.